This is the MTPredictor weekly update for December 11th, and we'll start again. This is the cash Dow this time. As you can see, it's very obviously tracks the YM tracks it, but the same patterns here on both markets, the future contract and the cash. And you can see what's developed as of late is our three-wave pattern down. They did close above the wave 4 there. They took the high of the wave 4 out here on this this intermediate pattern. You see the next resistance level right at the 12,300. That's off the wave 2 swing, and then this is the swing back here in the Dow, that 12,285, that they haven't been able to take the high of this out yet. Obviously, if they hit the DP resistance here, they got a good shot, or they will take that high out, that previous high back there out. This is a pretty good area of resistance here. We'll probably look at the weekly charts as well and see that there's some other resistance up here as well. We'll see. We've got a big week as far as you've got the Fed or FOMC meeting on Tuesday, 2:15 Eastern. That'll be the announcement. Thursday, you've got a slew of economic data coming out with jobless claims and the industrial production, the PPI. All that stuff will be coming out. Also, this week is the quadruple witching options expiration on Friday. We also know that the tendency is the market likes to move higher into options expiration, probably about 70% of the time. We'll see. We've got our Santa Claus rally that started early last week, and we'll see if that can continue. If maybe it's probably going to be slow early in the week with that Fed announcement. Probably not going to be a whole lot of ruckus after that announcement, but we'll see. I think the quadruple witching heading into Friday, we'll see if the market will attempt to move higher. Again, this prior swing back here is a big one. If they can take that out, albeit they will be fighting some major resistance areas here. Obviously, if they take these areas out, it goes all the way, well, it's what, 12,575 area in the Dow cash. If they can take that, these areas out, work their way through it anyway, then we're going to see more upside, probably testing the prior swing highs back from July and early and late July of 2011 anyway. So let's take a little peek at the ES on the weekly chart here, and you can see we had our major sell signal, and off of that, in terms of our Elliott wave patterns, we had a nice clean 5-wave pattern up there. That did mark the top there, and then began to unfold as a 3-wave pattern down into wave 4. We've come off the wave 4 and then rallied again. So this again in the ES now, this 1289.25 is the high peak, the close above the wave 4. We've talked about this week after week since we got this close. If they can take this high out, we'll see the next level of resistance. If they can't, we're going to roll over, and maybe we'll see these targets, which are the wave 5 targets to the downside. We also have this little wave 2 or B. This is an intermediate wave 2 or B support where we've rallied from here on the weekly charts. We can project up wave C. Let's just go to our tools here, up wave C. Let's make 3 clicks on the chart here. We need to click at A3. There's our minimum wave C target there, just slightly below that 1300 in the ES, which in and of itself is going to be a big number. So about 1295 in the ES, along with the decision point resistance area, is your next major resistance. And again, if they can't take out this swing high back here, chances are we're going to see this area down here at some point. Obviously, this is the bigger time frame. So market's kind of in flux. We're getting that rally that we kind of expected, that Santa Claus rally. We didn't get anything in Thanksgiving, which we typically do. Is another thing is the markets like to rally into holidays. We began last week to get that rally. Let's see if the markets can continue to rally into options expiration, kind of get the Fed meeting out of the way. We'll see how that goes. Again, things outside or overseas in Europe can really impact the day-to-day stuff here as well. So just be careful with that. And let's just take a peek at, we've been looking at Goldman Sachs as a kind of a proxy for the overall market. So let's see where that's at. We know that that $100 level in Goldman is a big one. So we had a little TS1 buy signal here off a pretty significant swing low back here. So we can, well, let's just put the analysis on it, and you can see the trade set up here. Here's the initial target. This being a fairly significant swing low here, we may be looking at wave 1 into 2, and then looking for wave 3 potentially. Your typical wave 3. But we talked about this $100 level in Goldman. You see how it's fighting to try to stay above that $100 level, and that's going to be the key. If it can stay above $100, in fact, if it can make more progress, then we're going to see more upside in the major markets. If it cannot, if Goldman fails to base this $100 and it goes below $100 again, that's going to be a big negative for the markets. So we'll continue to watch that and see if this, we closed at just under $100 on Friday in Goldman. So again, a good one to watch. Commodities here. Let's just start with the dollar. You can see the dollar index, the 4 wave pattern into wave 5 here. We've corrected back a bit off of the minimum wave 5 resistance. Here is the if we get a full correction off of wave 5, the correction would be back here, just below 74, 74.40, that 74.30 area in the dollar index. You've got some more resistance, the DP resistance, your typical wave 5. If the dollar begins to pull back as it did last week, again this is the weekly chart, it's probably going to allow gold and silver to maybe move higher. If this thing pulls back all the way back to the wave 4 DP back in here, then we should see a move, a rally in gold and silver. Let's just take a look at those markets here as well. On the daily chart in silver, we have the sell signal back on October 28th, and that has made some progress beyond the 100% initial risk line here. So any stops from the original position can now be moved to 34.72, which is the entry or thereabouts, wherever you got entered there. And I know some of you are short that. Contrast with the we go to the weekly chart of silver here, because the weekly chart of silver is actually long. This TS4, let's clear this off. Now this one we didn't, we were a little skeptical of this trade setup just from the standpoint of the fact it took so many weeks before we got an entry there. But it did eventually hit the entry there at 33.58, and silver closed Friday at 32.69. So we'll see which side wins out here. Obviously this is a pretty big stop. You can see this account is not big enough to trade with a stop this size here. So, but anyway, you see the numbers, and the target would be an all-time new high in silver at 52.78. Again, bigger picture weekly chart in that. But for the moment, on the daily chart, a little smaller time frame, you get that short in play on silver there. Gold, we'll find our gold chart here. Gold, continues to kind of go sideways as the dollar got a little bit of a pullback there. We saw gold, this is the daily chart of gold, so we saw gold make some initial progress, sold off a bit on Friday down to 17.13. So we'll see if it kind of bases this area. We had this wave 2 or B. It's actually wave B. We'll look at it. Resistance area. We'll see if it can get through that. Your next resistance area is going to be the DP off of this swing here. That'll put you at around 1820 area, and then we can project down the wave C. Let's just go down wave C using the tools here. 1, 2, 3 clicks, and that projects our wave C. So the next support we're looking at right around 16, just below 1670, and we actually take a DP off of this prior swing. So you got a cluster of support in that area and some resistance up here. If they can't get through this, we'll probably see this wave C down here. So again, it's just a bigger picture, kind of consolidating here. We can look at the weekly chart. Making up a little time, I guess, for last week. We were off. We had some other stuff going on there, so we're just kind of catching up. Let's just take a look. Again, there's on the weekly chart, you got that wave 2 or B. We know I don't have them on here, the weekly 50 period and 200 period, but again, we're still above the weekly 50 period moving average, and so this market is still very, very bullish, and expect that this market eventually will get it in gear and move higher. So we'll continue to follow that, and then let's look at oil. I guess the last thing we'll look at is oil. Oil made it into wave 4 support. You got a nice little blue buyer's bar there. It's worked its way, trying to work its way up into wave 5. Let me get rid of this DP so you see the minimum wave 5 target there. It's fallen off a bit. We'll see if it's just kind of a little B swing heading into wave 5 on a C up, a little minor pattern, but we'll see if they can work. Oil can work its way back above $100. The target there starts around 103 and change, probably almost 104 to the minimum wave 5, about 104, 104.20 area. If it doesn't, we can look at the wave C target down here for the next support. And next support sitting right around 95.50 in oil. All right, so again, be awake this week. Again, the FOMC meeting on Tuesday. It's options expiration. In fact, it's quadruple witching, and that's always an adventure. So be careful trading that actual Friday. And heavy news day on Thursday, and so should be an interesting week as we head into this options expiration and Fed week. Have a great week, and have good trading, and we'll see you back next week.